Welcome everyone to the second annual symposium on central banks and digital currencies from OMFIF's Digital Monetary Institute. I'm John Orchard, OMFIF's CEO. You're in very good company. We've got over 2,000 people registered from 140 countries for the sessions over the next 2 days. Among them are 120 central banks, but also other components of the financial ecosystem, commercial banks, FinTechs, regulators, consultancies, finance ministries, politicians, asset managers, multilateral development banks, and plenty more besides. It's a reminder how intricate and multi-layered the financial system is, which makes changing it incredibly complicated, as we rediscover over and again in our many discussions about the digital revolution in money and payments. It is changing nonetheless, with technology and consumer habits forcing the pace, opening up new opportunities, both retail and wholesale, but also bringing new risks and some head-scratching conversations about where money stops and securities or commodities start, and what role the state should play, not just in setting the rules, but also in providing payment and settlement services. We'll get straight into that in a moment with our first panel on the role of central banks in payments. Over the next 2 days, we're also looking at the crucial role of data and data management. That comes up time and again in these sessions. We're looking at if and how stablecoins can join the regulated payment landscape, and then on into the regulation of crypto assets, among other related themes. So do join us for all those with an excellent array of public and private sector speakers. Please check out the full agenda if you want to see what we've got on the swap card platform here. And do also use that to send in your questions. We're always very keen to incorporate good audience questions at the relevant points in our panel. So keep that coming. Thank you all for joining us then, and thanks to the companies who are helping make this event possible. Algorand, Accenture, AWS, Cello, eCora, G&D, Microsoft, Meta, Swift, Visa, Ripple, RTGS Global, and SICPA. Very interesting and I think indicative range of companies sitting alongside the many central banks that we've got with us, as I mentioned. Let's get straight into the state of play on central banks and their plans for CBDC and upgrading the payments infrastructure. Is that the same thing or not? We'll debate that in a minute. These plans, in my view, are speeding up and slowing down at the same time, and we'll explore that with my guests. We've got a great panel for you today. We've got Inge van Dijk, Director, Payments and Markets Infrastructure Division at the Dutch Central Bank. We have Masaki Bessho, Head of FinTech Center at the Bank of Japan. We have Saskia Devolder, Strategic Program Director for Cross-Border Payments at Swift. And we have Stephen Cecchetti, Professor of Global Finance at Brandeis International Business School. Before we get going with our panelists, I'd like to put a question to you, the audience. We're just putting up the slide now. So please do vote in our instant poll on this. The question is, as physical cash disappears, does the state need to A, continue to provide a means of payment to retail users, but in digital form, or B, rely entirely on regulating and or backing up private sector payment mechanisms, including new money formats? You can't have both, so please pick one or the other. Sinan, let me know when we've got a bit of an indicative result, and we'll share that. Let's begin, while we're collecting those votes, with what each of you and your institutions are working on in this area. Inge, tell us about your work at the Dutch Central Bank. A number of the Eurosystem banks have got interesting pilots, and the ECB itself has as well. Perhaps you could give us a bit of a flavour for both. Over to you, Inge.
Yes, thank you, John, and very good to be on board of this esteemed panel. Certainly an interesting topic these days, if you consider what's going around, and I'm sure we'll touch on that. Just to give a bit of background in terms of the Dutch Central Bank and the Eurosystem, because I'm here to speak on behalf of both of them. I think we launched a paper, Dutch Central Bank, early 2020 on CBDC and how we should proceed on this. And this sort of triggered a discussion in the Eurosystem, whereas in the beginning, the Eurosystem was a bit more on the wait and see and how everything is evolving in this respect. So that certainly jump-started the discussion, but by now it has been overtaken by, of course, an ECB program. Just the reasoning behind why this was jump-started in the Dutch Central Bank is also to do with the fact of how our payment landscape is organized, highly digitalized, highly efficient, with wonderful e-commerce methods, but also physical payments. And we saw in COVID a drop to 20% cash. So we're close to the Swedish, I would say. So this was for us the key trigger to consider we should definitely investigate a CBDC. And this has now been overtaken by the Eurosystem. I'm happy to report I'm part of the high-level task force on the digital euro, and as such here also to explain a bit about the progress being done there. So we had in 2020 an experimental phase and made with Governing Council a decision to move into a thorough investigation phase, which commenced last October and is to last 2 years. So we expect to see some results by October 2023. And this investigation is not just a theoretical one. This is a real practical one in terms of how could it work? How does it interplay with the intermediaries, with the private solutions that are out there? How does it play alongside cash? So this is the key thing. And in the end, in October, the decision will be there whether or not we are going to launch the euro in the Eurozone. So I think this is it for now, John, and happy to comment further on this later on.
Thank you. Lots to explore there, Inge. Masaki, tell us what the Bank of Japan is working on with respect to CBDC, first of all.
Right. Thank you very much for this great opportunity to discuss about these very interesting and timely topics. And at the Bank of Japan, since 2016, I've been carrying out the Project Stella, which is a joint project with the European Central Bank, exploring the possibility of introducing DLT platforms to the wholesale payments. And we have published 4 reports dealing with PVP transactions and DVP and privacy-enhanced technologies. And in tandem with these works on wholesale CBDC, we are working on general purpose CBDC. And in 2020, in October, we published our approach on general purpose CBDC, and we committed to continue our works on technological aspects of CBDC as well as institutional arrangements. And for the technical aspects of general purpose CBDC, we started the phase 1 of proof of concept in April of 2021, last year. And we have carried out experiments on the basic functions of CBDC as a means of payment, including issuance, transfer, and redemption. And the phase 1 was completed on track in March this year, and we published our report in April. And actually, at this moment, only Japanese version is available, but the English version will be published soon. And immediately after the completion of the phase 1, we started the phase 2 of the proof of concept, where we're trying to carry out experiments on some additional elements of CBDC, including possible safeguards to mitigate the impact to the financial system and how we could enhance interoperability with the means of payments.
Thank you, Masaki. A quick supplementary question. I think the emphasis of what you look at, it skews perhaps slightly towards wholesale. Are you looking at wholesale and retail in equal measure?
Yeah, actually, we are looking at both, but recently more resources are used for the exploration of general purpose CBDC. But actually, we have not yet decided to issue a CBDC. So our stance is that the digitalization of society could develop so rapidly, and we have to be ready for any eventuality where the general purpose or wholesale CBDC is required from the society.
Masaki, that's very similar elsewhere, including the UK and the Eurozone, where it's a matter of being ready if needed, without quite making the decision yet to introduce. Final question quickly, Masaki. Inge talked about the change in cash use, particularly over the COVID period. In the UK, it's up down to something like 3% of payments, I think. How does that look in Japan? Has cash, physical cash, kind of disappeared anyway?
Yeah, actually, the situation in Japan might be a little bit different from that of in the UK or in the Euro area. Yeah, it's true. With the incentive programs which were provided by the government from 2018, the non-bank regular payment services have wide adoption in Japan. And now, more and more, their transactions are settled by the digital payment solutions. But at this moment, the amount outstanding of cash is over 20% of our nominal GDP, and which stands out in the world. And actually, Japanese people prefer cash because in Japan, it's very safe, and ATMs can be found at any corner in the street, and we do not have significant counterfeit issues. So cash is actually very convenient in Japan. But having said that, the situation might change in the future. Actually, Japan faces via demography issues, and in particular in rural areas, it might be difficult to continue to ensure this dense cash distribution network in the future. So we have to be ready for possible changes in the future.
Understood. Certainly the Eurozone, the country next door to Inge's, Germany, and we run surveys on this, is still very attached to physical cash and pretty suspicious for reasons we can come on to about the state collecting information about retail transactions and so forth. We'll come back to that. Saskia, back to wholesale now. And SWIFT, as we've discussed plenty of times, sits at the heart of the cross-border financial system. And of course, you've heard DLT proponents and stablecoin pilots. I know they're in trouble in the last day or two, but stablecoin pilots suggest that SWIFT isn't necessary, although they're running into tricky issues. Tell us what the future looks like at SWIFT in this landscape, as far as you see it.
Okay. Thank you, John, for the question. I'm delighted to have to share my views and SWIFT views with this audience. First of all, we understand that there might be reasons to issue CBDCs. Where we want to look at is what could be the role of the banks still in there and the financial ecosystem, but also look at interoperability. You know, we talk a lot, and there's a lot about cross-border payments that have much more hurdles than domestic payments. And so what we really are focusing on is making sure that when countries design their CBDC, they don't only look at the domestic usage, but they also look at the cross-border side. How can they interlink with other CBDCs, whether they're on DLT or whether they're messaging based? How can they make sure they can interact with domestic ACHs, RTGS systems? And how can banks make sure that they can exchange them for their customers, whether it's a consumer or whether it's a corporate, if they want to use it? And then also the digital asset, which also ends in finality, so in the use of potentially a CBDC to settle. How can we make sure that keeps running as it runs today, and making sure that there's interoperability, that we don't come into the same potential issues that are today, but think smartly when we design those CBDCs. So that's knowledge we try to share with the entire community.
Thank you, Saskia. Certainly in our discussions with central banks, then there isn't always affection for commercial banks, but there's certainly an insistence in most cases that they need to continue to be part of the system for all sorts of reasons. You know, regulatory is particularly important, but also the creation of credit, of course, which might be, in theory, disrupted by CBDC. That comes up frequently, and the central banks are aware of it. Stephen, I think it's fair to say that you're not bought on the necessity for CBDC. So I was very keen for you to put the case for it not being necessary, to flesh out some of the issues. Over to you, Stephen.
Thanks very much, and again, thank you. Let me join the others in thanking you for the invitation to participate in this very interesting conference and this interesting discussion. first of all, let's just start by making sure that we all keep in mind that central banks have always been critically involved in payments, wholesale payments for sure. Remember that central banks are by and large a 20th century, not the Bank of England or the Riksbank or a number of others, but a 20th century creation in order to ensure the smooth and safe operation of payments, wholesale payments between banks. And so they're always involved in that. The issue here is not whether or not central banks are going to continue to be involved in wholesale payments and issue digital reserves and digital liabilities, which of course they've done for a very, very long time, but whether or not they will be involved and how they'll be involved in retail payments. And here, of course, a number of central banks are quite deeply involved in retail payments, operating and owning retail payment systems already. And those payment systems tend to be quite cheap and quite fast and operate quite well. And when they don't own them and operate them, they're in partnerships with the private sector. And again, those systems tend to generally operate quite cheaply. This is not necessarily true for retail payments cross-border, which is a quite different issue. On CBDC itself, my criticisms over the past few years, and it has been quite a while now, has been that CBDCs, as they are construed, which would have to be they'd have to be available in unlimited amounts, or you risk bank liabilities not being exchangeable at par in all states of the world. They'd have to be available to everyone. They'd almost surely have to be interest bearing, and they cannot possibly be anonymous. Those risk disintermediation. They risk currency substitution. They risk personal privacy, and they create really enormous compliance headaches. Because, of course, remember that the reason that people don't have financial access, the reason that a lot of payments are expensive is because of the problem of identity verification and things like AML and KYC. So these are things that would have to be taken care of by someone regardless. And so the costs are going to still be there. I don't deny, of course, that retail payments providers are collecting rents because they tend to be very, very large. There are network externalities associated with payment system provision. And so there's sort of a form of increasing returns that leads naturally to rent collection. But CBDC, it seems to me, is the wrong solution. You said that people want to be ready if it's needed, but if needed for what? I don't need CBDC. I haven't made a paper transaction. I make one paper transaction every month or two, and that was true largely before the pandemic. So we've been using private money for transactions. We've been using private and public partnerships for payment systems for many years. There just doesn't seem to be any need to take the risk associated with CBDC.
Well, that's and certainly the Fed seems to think that the House of Lords Committee here in the UK thinks that. Our panel question, our audience question, said a significant majority in favour of the state retaining a role in providing the mechanism to pay. So, Stephen, absent a CBDC, how might that happen? I mean, obviously there are things like Octopus cards and Oyster cards and so on that exist in London.
Well, I can let Inge speak to TIPS, which is the Eurosystems the Eurosystems payment system, which is a retail account-to-account system. The US next year will start FedNow, which is a retail system. The UK has Fast Payments, but Fast Payments is basically a public-private partnership. So I think that the idea here is to create a platform that is a public-private partnership for fast retail payments that are account to account. But remember, account to account here means that there are banks at each end that are doing the KYC AML work. CBDC is going to have that. So you can't get away from the fact that you need something like some sort of compliance mechanism. And then what you can ask what the role of the public sector should be in facilitating and coordinating account to account payments.
So you wouldn't believe in the provision by the state of anonymous anonymous tokens somehow owned by the retail public as physical cash?
Well, I mean, I think that's a terrifying prospect. I once was chairing a panel when somebody said, "Wouldn't it be great if you could send $10 billion and not have to worry about who it came from?" And I think that if you want, if you want to create a mechanism for the transfer of funds across borders and within borders by terrorists and criminals, that's a great way to do it.
Of course, but you might set, as the PBOC has done, not for that reason, but you might set limits on the amount of.
So as I said a minute ago, that of course risks that risks central bank liabilities and private liabilities not trading at par in all states of the world. And that's why we have central banks, is to ensure that that's the case. Yeah. Remember that if you want to see a financial crisis, create one where you can't exit banks for public money. I'm perfectly happy having stacks of banknotes sitting in repositories that people can get at if they really need them. But I'm not happy having people be able to have limits on those on the quantity of those liabilities.
Okay, and as final question to you, Stephen, exploring what you just said. You pointed out earlier that there are issues around identity. And we've found this in surveys that we've done with the German money company G&D. People are worried about, particularly in places like Germany, but also the US actually, the state collecting payment information. I think that in the hypothesis you've given, Stephen, that's basically tough luck. Either the state or a commercial bank will know about every single transaction in theory, or could.
Well, of course, it's true already. So if courts give you access to someone's banking information, you're already going to see their transactions, and courts can already have that. I think that the issue with CBDC and privacy is just a bit more extreme. But I don't think that's the top of my list, because we can always have private providers, aggregators of CBDC. And in fact, I would argue that if you really want to see if this is going to run, you should license narrow banks and allow them to issue liabilities that are guaranteed to be 100% backed by central bank reserves, and see whether or not anybody goes for it. Because my guess is it's going to be too expensive, and nobody's going to want that anyway. But that's the way that you would do it. Is you would do it through a private system broker, aggregator, or some sort of provider.
Okay, thanks, Steve. Let's jump straight to that idea, that the fun stuff with stablecoins, Inge. Can you envisage a couple of questions first before we get to that? First, on Stephen's point about whether central banks should provide an anonymous means of payment in small denominations or not. What do you think? And if not, do you have to facilitate these payments through CBDC, or can there be some other token system somehow partly facilitated by the private sector instead of CBDC? What do you think, Inge?
Maybe just to, before we go into that question, maybe just a tidbit back. I think there's much to be said for what Stephen is saying in terms of who does what in this respect, and how good the systems are that we have currently in place, and we should treasure them. Because also over here, certainly the trust is key that we have established, and our systems have worked well. But we also see the vulnerabilities of new upcoming technology, and we should accommodate that, so to speak, because it's a bit more now, I would say, what's happening with all of the cryptos than teething problems is becoming serious. So this is maybe a topic for the later on. But the key thing is here that we want to safeguard the trust on the one hand and want to provide stability on the other hand. Two things I would like to bring into this cordon before we touch on the anonymity. And the reasons for really looking seriously into this business is that, one, if you want to maintain stability and trust, you should be, as a central bank, in control and have supervision over those parties. Now, obviously, in the Euro system, this is quite a bit different from the US, because we have many of the vital systems in non-European hands. So this is a key topic that is out there. And of course, it is of no interest whatsoever to the consumer because they're looking at the front-end customer experience. So that's clear and understandable. So I think the key thing for us is to have a very good narrative in terms of what additionally this provides. But I've also seen the other side, with the negative interest in everything that is going around, the business model for some, certainly in the Dutch market, has become very small. And that means that it's been crowding out the accessibility of payments. And we all know that the access to payments is, of course, inclusion. So these are the two key things, I would say, stability and the inclusion that we're after in terms of making sure that also in the future this world works. Now, back to your question on anonymity. I think from our perspective, of course, this is the key balance that we need to strike to a certain extent. As you already said, John, indeed, today we're already doing this on the AML one. And if somebody does it as a central bank would do, then of course this needs to be absolutely on par with law and everything. But of course we need to be very smart about this. There are people who are much better equipped, organizations much better equipped to do this than we are. So we as central banks should play a central bank role and not step into the intermediary roles, which could be very well with smaller parties, PSPs, FinTechs, or with already established parties. I leave that to the ambitions of those parties. So this is definitely the way the Euro system is going. We don't want to have the accounts in the central bank. Maybe we're looking into that, but how that interplays is of course key. Now that touches of course also on our legislation and in terms of AML and anonymity. And what we're trying to find is of course privacy, and that's a bit different maybe from anonymity. So when the data is there, it should be safeguarded. It should only be used for purposes what's necessary for the transaction as it is today. But of course, when smaller payments come into play and they are the future substitute for cash, we should consider that maybe whether they're offline or online, I really don't care, that a certain extent of privacy is safeguarded, because that is probably the way to go. So this is the direction that we're looking into. Full anonymity is not possible, but you can definitely play according to the rules of the PSD in Europe and say, okay, this is what is safeguarded. You can rest assured that if any person, any organization is going to play it safe, it's going to be your central bank, who's regulated by the state, of course. More so, I would say, than intermediary ones. And I think there we have a very important communication message to bring to the public, not to say that all of those private parties are not safe, because that's also not the case. So this is a very careful thing. But in terms of the anonymity, we're looking at privacy for smaller payments and to see if that sort of, in terms of functionality, coexists with cash and then have it sort of inter-aligned, that you have a level playing field or same way of treatment in this regard. Maybe that's the first answer to your question.
Thank you, Inge. Masaki, just to quickly on this, I don't want to spend too long on anonymities. It sounds like in the digital world, it's probably going by the wayside anyway. But in terms of your CBDC design, where would you put, let's call it privacy, not anonymity, in the priorities for the design? As people seem attached to it, but maybe it's something they're going to have to surrender in the digital environment.
Yeah, I think it's almost same line with Inge. First of all, digital payments inherently leave certain digital footprints, while a number of privacy enhancement technologies are already in place or being developed. A limited anonymity or pseudonymity should not be provided for digital payments, either those are issued by the private parties or by the public parties. And I think certain level of transparency is necessary to ensure appropriate ML safety checks. And on the CBDC design of Japan, actually we have not yet decided who will be responsible or who would carry out the ML safety checks for CBDC transactions. But as you may know, many central banks are thinking that the intermediaries or wallet providers would likely to be the best position to carry out the monitoring of ML safety checks, because they have already done that kind of business and they have know-how. But yet, I think it's a discussion which requires engagement with the stakeholders and relevant authorities. So we have not reached on this point. But having said that, now I think the error safety checks have been carried out separately by each institution, but now we have some momentum to explore further cooperation among the banks. And actually, in Japan, now the bill which allows further cooperation between banks for the MSFT implementation is under discussion at the Parliament.
Thank you, Masaki. The People's Bank of China E1 experiment, I think there's something like 260 million people in that experiment already. We heard a discussion between the PBOC last year and a commercial bank arguing about the privacy issue, which was less of a priority for the PBOC and easier to implement in China for various reasons than a country like Germany or the US. And his answer to the challenge was simply that commercial banks de facto collect all of this information already. So it's probably a non-issue. Do you think that's, you're nodding, Stephen, what do you think?
Sorry, I was in the wrong place. Yeah, I think that there's a very big difference between the, I actually disagree a little bit with Inge because I think that there's a difference between the state collecting information directly and private sector collecting information and possibly misusing it, which we do have to worry about. But the state collecting, remember, the state has some slightly different, shall we say, slightly different enforcement capacities. And I don't believe that my bank is ever going to say, come and take me forcibly out of my house and put me in jail. The state might do that. And as a consequence, I worry about governments that shall we say become rather heavy-handed in certain with respect to personal freedom that might be associated with this. So I think that the government should not have direct access to this kind of information. It's obviously true that the banking system already has that, and in fact, I sort of tried to say that already, and that it's available to the government should they want it. But they have to go through appropriate legal channels to get it. And I sort of like that, that they can't get it just on their own. For reasons that we don't need to discuss right now, I basically trust all of you more than I trust government entities themselves. But I will say that China, I would caution China, using China's experiment with CBDC and that in other countries, because remember that China's concerns about disintermediation are rather lower because they have state banks, and their concerns about currency substitution are extremely modest given their existence of capital controls. If they were to have an e-renminbi along with convertible currency and along with a private banking system, then matters would be rather different.
Yes, I would explore the role of the bank. Saskia, we've had a question for you on this. One of the frequent arguments proposed by proponents of either CBDC or DLT in finance is to make the system cheaper, especially cross-border. Lots of reasons why that's expensive, but someone's asked, haven't got their name, what can SWIFT do to reduce excessive rents collected by banks and networks for cross-border payments and cash remittance? I mean, that's quite a punchy question, but I know you've got some good answers. So please address that, because that's one of the things that's been driving the discussion.
Yeah, thank you, John, for that question. And I think, and if I may later on come back to some of the discussions previously, but to reply to a question why they're so expensive, I think Stephen already referred to it. If you look at what cross-border requires, it's about AML, sanction screening, KYC, whether it's a retail or a wholesale payment. There's a lot of work to be done, which is very different from the domestic payment side. And somebody has to do that work. I think the banks are already pretty well organized to do that, but it's an expensive item to do. On the other hand, I think coming back a little bit to earlier, public and private sector is about how can public and private sector focus not only on the new things like CBDCs, but also on the actual payments today. And if we look at the G20 agenda and the different building blocks, for example, harmonization of these rules would probably help reducing the cost, because every market has now different rules. Banks need to apply, whether it's data privacy, whether it's data location, whether it's the AML or sanction lists, they're all made in different formats. So banks have quite something to manage there in order to actually execute these cross-border payments. So looking at more harmonization, how can we do this together in a more simple way, will probably overall enhance the speed and the access to cross-border payments. And if you allow me, John, for a second, coming back to the discussion that was just ongoing,
Please.
I wanted to make two remarks. The first one is central bank money. We need to go back to the role of a bank. A bank is not only about allowing a retail and a wholesale customer to do a payment. They also offer liquidity, but they also offer loans. And in the end, they're enable the economy to happen. I don't think there is enough central bank money to do the full economy without giving out additional loans in commercial bank money. So there has to be a collaboration between central bank money and commercial bank money. One cannot do without the other. Commercial bank money needs indeed the RTGS and ACH systems to create finality in central bank money and to create stability, but also the other way around. I don't think that consumers and corporates can finance everything with central bank money. They still need, the loan capacity from banks, which are, by the way, also linked to risk taking. So how do you evaluate somebody to give them a certain loan? That is all quite some work where banks are actually quite good at. So that whole item should not be forgotten. It's not only the simple part of payment. Second, I wanted to say is data protection and trust. I think banks are still quite well trusted by their consumers and the corporates. The question will be, what about stablecoins? What about cryptocurrencies? And I think it's also the role of central banks to make sure consumers are aware about risks in certain payments methods that they take, and whether something is a payment method or not, and make that clear to the consumer. Because in the end, if I think about my kids, my parents, they don't know the difference between commercial bank money, central bank money, even sometimes stable coins, because even the word is quite confusing. As it's called stable coins, people easily think they can trust it. And then the last point I wanted to make is that the industry is already, and I think, Stephen, you already referred to it a few times, the industry itself, I think, together with the public sector, is really already trying to, what we have today, enhance it. You can create something new, CBDCs. I don't think SWIFT has any reason to say it should not be, but at least we should focus today on what can we do together to enhance what is already working well. And where are the items that actually could encourage the speed even more, the access even more? And I think that's why the G20 agenda is important for everybody to collaborate. And we hope that everybody continues to work on it. You see initiatives like, SWIFT is doing with EBA and TCH, interlinking instant payment system. That is really, a way by the private sector to try to increase. You see, 5 years ago already, in the meantime, when we set up GPI with the community and the GPI tracker, the reason was actually, one, to show what is the speed, but more importantly, to detect what are the issues. Why do some of these payments take a few seconds, and why do others take hours and days? And, that is mostly linked to compliance, regulations locally that, that forbid actually the transaction to be executed in a couple of payments, and here and there some capacity from banks to process. And not all banks, by the way, also not RTGS and ACHs are capable of processing 24/7. So I think all these elements together should also be taken into account, and not only look at what brand new system we can launch. And we need to be careful that there's not even more fragmentation in the market than there already is today.
Okay, we'll come on to that as well, as we've discovered recently a benefit of RTGS that people hadn't really thought about. We'll come back to that. Just to explore the point on cost a little bit. You've explained very well. There's a complicated machine in the background with banks moving money around the world. There's foreign exchange to worry about, lots of regulations, KYC, AML, and so on. And certainly central banks are struggling to replicate that system with wholesale CBDC models, because it's unclear how they'll be governed. But let's say that Inge and Masaki decide to enable carefully regulated stable coins to be plugged into RTGS alongside commercial banks. Do you think they'd find a way for prices to go down as a result of the competition? What would you expect on transactions?
I don't have a glass ball. I wish I had. I think it would make my life easier, but I'm not sure if they don't run into the same problems, whether it's commercial bank money, whether it's stable coins, because all these things don't go away. As Stephen just mentioned, you don't want somebody to send anonymously 10 million or how many he wanted to send to somebody. So all these items will still have to happen, whether they're stable coins, whether they're commercial bank money, and even when they're central bank money. You still want to know who's the sender, who's the receiver, and are these entities, should they get that money or send that money? And that role, whether it's a bank doing it or somebody else doing it, it will still have to happen. And then I would suggest banks, which are in the last couple of years really heavily invested in making sure that happens correctly, that you allow them to continue that, because giving it to another party will only add additional costs because more parties will start to do that. Or if the central bank would take on that role themselves, it will only add up instead of making it more simple.
Okay, thanks, Saskia. Inge, I wanted to ask a question. I think we've answered this actually, but I think it's worth restating. Scott Hendry at the Bank of Canada asks, what's the public money that can exit the private sector if there's no public money like cash or retail CBDC? How would you answer? I don't think there is any actually, and that we don't mind, but how would you answer that?
Maybe just the first come to Saskia's point just now. I don't think it adds to the complexity. I think the key thing that we've seen with the stable coins and everything that's been going around is that effectively the private sector has been, and maybe also to a certain extent the central banks, we've been lulled asleep by ourselves, and I've been privy to that as a private banker myself before this. So all of the latest spurs of growth have come from the fact that we've let it run too long, and payments have not really increased in speed, both across I think the US and other countries. So this is what you see happening. So the benefit of having others step in with whether it's a wholesale CBDC or something, is the fact that we start to think about how can this go better. So this has in fact increased and spurred it. I think it's jump-started everybody that we need to move quicker on this. So just to pinpoint that, and of course the risk of much more in disintermediation is there and the cost, but that will sort itself out as it usually economically does. So back to your question on Canada. John, please help me again. What was it?
Scott Hendry says, what's the public money that can exit the private sector if there is no public money like cash or retail CBDC?
True. Okay, so what's the public money that can exit the private sector? I think it's, first of all, regardless of the comment from the esteemed colleague from Canada, I think it's limited, because we all know that effectively the amount of money on the one hand, in terms of cash in Europe, most of the cash is under the mattress still. It's being reserved by people. So this is not in retail payments. It's either in the wholesale part or it's in the pockets of somewhere it's stacked. And that will continue to be the case. So we've done our analysis at the Eurosystem with a colleague Ulrich Pinsal and others in terms of the risks that we actually see. And the first indications are there also that it's really highly limited. And even if you put, and these are the thoughts, of course, you put parameters on it and you limit the amount of retail CBDC going around, then the effect is even worthless to a certain extent. So that's never, I think, never the issue. But one should be prepared in terms of war, so to speak, crisis. So certain type of parameters need to be in place for the non-happy flow, so to speak. So, but effectively, my answer indeed, John, would be it really is, in my terms, a non-issue, but we all need to live through that, so to speak. So
okay.
Same page, yeah.
Quickly to you on that, Masaki, does maybe M0 doesn't matter? Scott Henry's asking what public money would come out of the system if there's no cash or CBDC.
Actually, the Bank of Japan has not yet dealt with that scenario, and the announcement we made in October 2003, we made it clear that we are committed to continue providing cash as long as there is demand. So we are not aiming to replace cash by CBDC. Rather, CBDC will complement cash. But and I think even if CBDC is introduced, I think at least at the initial stage, cash could play certain role. As I mentioned, it might be pretty difficult to ensure full privacy with CBDC. And given that, I think if people prefer higher privacy or anonymity, they can use cash for their payments. And another point is that we're much interested in the opportunities of offline payments, but at this moment, we think we have a number of challenges to implement it. Actually, Japan is a country where we face a number of natural disasters, so we occasionally have disruption of telecommunication or electricity power grid. But therefore, resilience of the payment system in case of a natural disaster is critical. Because most of the private payment systems have some vulnerabilities for, in particular for disruption of telecommunication, we are much interested in providing alternative for these cases through CBDC. But in a sense, cash is a great innovation which could address these issues. So for the time being, I think cash could play a certain role in the payment.
Okay, thank you, Masaki. Stephen, I've had a question in, that's quite important actually on dollarization. So one thinks, Inge, of the Hungarian central bank looking at Ulrich Binzal and making sure it's going faster, for example. This is not in the Eurosystem, but we've had a question in, Stephen, some non-US papers say CBDC can resist dollarization, but some US discussions say CBDC can leverage US strength. So do you see, people talk about this all the way around with the renminbi, to what extent should CBDC be an instrument of geopolitical leverage?
Let me just make three quick, very short comments in response to what other people said. First of all, we have Zelle in the United States, which is a payment system that if you're in the United States and you give me your telephone number and you register, which involves pushing a button on your phone, I can send you up to $5,000. You'll get it immediately. We can discuss what the technicalities of that are and whether there's actually any risk that anyone's assuming in that, but it's fast. And it's up to reasonable sort of medium-sized retail payments. The second point I would make is that remember that the government is always guaranteeing through deposit insurance significant fractions of what's in people's bank accounts. For most people, that they don't reach the limit. And so in fact, there's a sense in which they already have central bank money, or at least government insured money that's happens to be sitting on the liabilities of a private bank.
Yep.
Third point, very quickly, is of course the question about central bank money is M0 is reserves and currency, not just currency. Central bank liabilities are wholesale, and finality, the ability to have finality on and settlement on the central bank balance sheet for your bank is what you need, not the ability to have finality for you individually. And I think that's extremely important. A point related to what Saskia said about who finances what. The risk of disintermediation is the risk of the creation of the state bank. It's a risk of the Gaz bank. It's not a risk of not financing the private sector. It's a risk that the state finances the private sector, and that's a pretty bad deal. We can discuss, what happens there. On dollarization and strength, I think the answer is absolutely yes. A country like the United States, or let's say the Euro area, or some other large country that is perceived to have a stable financial and economic system, where they create currency substitution through the issuance of a central bank digital currency that's available elsewhere in the world, then essentially is going to disintermediate that country, taking over their financial and economic system through the currency supply, and then they will be able to use that as a way to pressure politically that. So I think that this isn't a discussion. It's worth having discussions about the relationship of geopolitics to finance, for sure, because we've seen that with the sanctions on Russia. But I think that if you want to see that big time, CBDC is going to be a great way to project political power into other parts of the world, and not just Panama and El Salvador.
But in the case of the dollar, actually, the Fed, I would say, broadly speaking, is among the most conservative on CBDC. I've heard people saying it's a solution looking for a problem and that kind of thing. Not all of it. There's an experiment to the Boston Fed.
Well, that's of course the House of your House of Lords report is entitled "Central Bank Digital Currency: a Solution in Search of a Problem," and I do agree with that. I think there are many reasons that there are many reasons that the Federal Reserve is hesitant. The United States operates, I mean, every country is idiosyncratic, but to say that the United States is idiosyncratic is to understate the case. And federal power is something that's looked on askance by many people in the United States. I'm not sure. There are people who don't like the existence of a central bank at all here. And the idea that the central bank would then take over the payment system in the way that it would with CBDC, I think, is something that would be politically extraordinarily unpopular. So they have to be very, very careful. And this is, I think the US is pretty good at projecting power using other means. They don't, at the moment at least, need CBDC to do it.
Thank you. Masaki, you had a specific question for you, if I may put it, which is, what's the core design of data protection for a Japanese CBDC to mitigate risk? As you mentioned, it involved many parties.
Yeah, okay. Yeah, I think privacy is very important for the CBDC. This is because in major jurisdictions, including Japan, privacy is respected as one of the fundamental human rights. And in addition, I think privacy is important to ensure sufficient level of CBDC adoption, which will be needed for its policy goals. And also, privacy protection of itself will not be within the limit of a central bank. The Bank of Japan does not have any intention to introduce CBDC aiming to enhance national surveillance of the general public. And also in the international forum, the importance of privacy is stated in the Principle 3 of the G7's latest CBDC policy principles, which are committed for the drafting. And I think in designing the CBDC ecosystem, we should strike a right balance between the opportunities of data utilization and privacy. Actually, usage of payment data has potentials to improve consumer benefits, thereby creating new value added. For example, data collateralization, such as transaction lending using payments data, could contribute to financial inclusion. Also, target marketing based on payments data could bring consumers opportunities to find a solution that best fit for their needs, which even consumers themselves has not been aware of. But in doing that, I think it is important to provide alternatives or options or choices for the consumers, depending on their privacy preferences. So I don't think it's desirable, the scenario where if you want to make payments, you are forced to allow monetization of your personal data. That's not what I want. And to achieve that, actually, the Bank of Japan is thinking of the CBDC ecosystem, dividing which two layers. The first layer, let's say basic infrastructure layer, is an area where plain vanilla payment instrument issued by the central bank is to provide it to the public through the cooperation between the public sector and the private sector. And this area, in this area, collection, access, use, and storage of personal data would likely to be subject to strict standards such as data minimization, purpose limitation, access limitation. And on top of this first layer, we have a second layer where private enterprise provide diverse optional services to the consumers on top of the plain vanilla CBDC. Well, of course, private enterprises should be subject to data protection regulations. CBDC ecosystem could provide such private parties opportunities to make use of data upon the subject's consents. Okay. Anyway, what I'd like to emphasize is that the choices to reflect the privacy preferences of the consumer is the key.
Okay, thank you very much, Masaki. You're describing, I think, a carefully regulated heterogeneous system of public-private partnership, and we hear that in most cases. Stephen, I wanted to quickly pick up on a term that Masaki just used, and we haven't talked about at all today, but we've had a very developed world discussion. There are very interesting cases for CBDC in countries which have a high penetration of mobile phones, for example, versus financial inclusion, bank accounts and so forth. So there's quite an interesting case that governments could disperse money directly to the public without banks in those places. Are you not convinced by those kinds of scenarios?
So I realize there have been some glitches in the system, but I point to the case of India as a counterexample for this. The Indian system was one that combined biometric personal identifiers, Aadhaar system that have iris scans, facial recognition, and thumbprints, along with subsidized government-supplied bank accounts that over a period of 4 years roughly brought about 400 million people into the financial system. Now, unless I've missed something very fundamental, the Reserve Bank of India does not have digital currency. So what we're looking at is the combination of personal identifiers, which is necessary for the AML KYC compliance, and subsidies. Because remember, the reason that people don't have access to banks is twofold. One of them, they don't have identification, and the other one is they don't have any money. And so if you don't have any money, banks aren't interested in your business. But if the government is willing to subsidize your participation in the financial system, something which I would support for sure, then that would work. So this is all done, of course, going to be, mobile phone penetration is very important for this because, of course, then people can take their access with them wherever they go. But the access to the system does not need to be access to the central bank. It needs to be access to a commercial bank, which should exist through subsidies. Should that subsidy be done through the central bank? I don't understand why that would be the case. Are you going to subsidize CBDC? You're almost surely going to have to if you're going to do it the way that's being suggested. So my answer to this is look at what India did, look at their solution, and bring access through the creation of unique identifiers that are biometric and subsidies.
Okay, thanks, Steve. Very briefly to you, Inge, on this financial inclusion. We've had questions about exactly this from RTGS Global and eCora as well. It's something we haven't talked about much on this panel, but is perhaps one of the best use cases for CBDC because it does actually solve an existing problem rather than a theoretical one.
Yeah, I think the key thing here is that as public or central banks, we are in the public element. We want to allow the market to play their roles, but we have to intervene as and when the private parties don't step in. And I think that's been the key discussion that we've seen going around this. Some jurisdictions have stepped in and taken it up, others haven't. And this is why, of course, the public and the central banks have to step in to make sure that this inclusion is safeguarded. Of course, there's valid points in terms of how you reach the party and whether they actually have some money in the account. But in the end, we've seen that the private central banks have, of the private banks, have not all private parties, because I've been calling on fintechs as well to step into this inclusion part. I believe there's a business case to be made, certainly for the elderly people or those who are digitally less adept to really lift on something. But effectively, we see that people are being pushed out, and we see that also the G20 roadmap, that the cross-border element has just become too expensive. So we need to intervene to make sure not to get the access to the central bank by itself, because that's not the role of the central bank, but to make sure that the private parties start acting. And we need to do that from both angles. One, what can we do as central banks in order to push that? The other is on the supervision element in terms of regulatory aspects. And of course, that interplays with jurisdictions. I think some jurisdictions have it easier because they have currency and jurisdiction in one hand. The Eurozone is a bit different there because, of course, we have the various multitude of jurisdictions. But of course, then we also have the effect that we are already a very mature country, and still we have inclusion to consider, because it's not across Europe that everybody has access.
Yes.
So this is one of the key things that we need to look at. This is our role. So this is what we're here for.
Very good summary. We've run out of time, but thank you all for an excellent tour of the horizon on these themes. Very useful indeed. We greatly appreciate your time and engagement and openness today. So thanks very much, and see you next time.
You're welcome. Ciao, ciao.
Thank you very much for having me. Bye-bye.
Bye-bye.
Bye, everyone.
Bye-bye.